Tiff Macklem, the head of Bank of Canada, says that the high level of indebtedness for homeowners in Canada is the reason they actually pause rates. That's the first article we'll be reacting to in this week's reaction video. The second one will be a Vancouver developer files for insolvency. Are we going to see that coming in Toronto in the near future? I'll be covering that. And then the last topic we'll be covering is the allowing of multiplexes is now in draft form. We'll be going over that and what kind of effects it has on the real estate market. Now, if you're looking for some help on how to navigate this real estate market, you can book a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto Area on top of making awesome educational content for real estate just like this for you. Now, the first article we'll be going through is Macklem says homeowner debt helped spur early Bank of Canada rate pause. Now, if you don't know, in January 25th, last month, they announced that was the last rate hike, 25 bips, and they're going to pause from here on out conditionally. Now, he came out and said one of the reasons why that they decided to be the first kind of like big central bank to pause is because the high level indebtedness that Canadians have as homeowners, which is about 180% of the debt to income, right? So meaning that for every dollar of income that a Canadian owns, they owe $1.80 in terms of debt, which is a little bit ridiculous if you think about it. Now, he was saying that, but one of the causes and one of the reasons that I'm personally concerned is that as we kind of separate from the US Federal Reserve, it's going to cause, I won't call it a collapse, but there's going to be some strain on the Canadian currency because it's going to be dropping, right? Now, at the moment right now, the currency is holding up surprisingly strong. We're actually the best currency relative to the US dollar at the moment, but TBD if the Feds continue raising in March, I think, right? So like I was saying earlier, we are the first of 7 central banks to actually pause. The other ones are still raising at the moment right now. You can kind of see right here that the amount of level of debt that we have as Canadians relative to those 7 banks, we're significantly higher and we're behind UK. Now, US had that kind of cleansing. Japan has always been a weird spot when it comes to their debt. They're kind of like the anomaly. So a lot of people are really afraid of this 185% debt to income ratio. And that's kind of why they're saying, because the amount of debt that we as Canadians have is higher than most, we're much more rate sensitive. You also have to remember, for US, they have like 30-year fixed rate mortgages so that you don't have sensitivity on renewal. Whereas the longest kind of mortgage we have is a 10-year term and you're paying a major premium on it. And honestly, no one's gotten it in the last past bit. And the most common is 5-year. So anybody who's coming up for renewal that got a mortgage in 2018, which is like 20% of the people, may be facing a sticker shock when it comes to their interest rates, right? So that's kind of what they're talking about, how we're very rate sensitive because of the duration of the mortgages we have, plus the level of debt we have. We're very highly sensitive. So that's why they're saying they paused the rates. Now, they have seen very sharp slowdown in housing, but given how rapidly we raised interest rates and how much we raised them, this is broadly in line with our models and what they have suggested. So he's saying that he suspected this rate drop. Now, I don't know what rate drop he's using, whether he's looking, like national base, which is down like, I think 13%, or he's looking like regional base and like Ontario's down like 20%, and then BC's down like 18% or something like that. And he's saying that he thinks, again, I'm assuming it's based on his model, that there'll be a little bit more price drops in the real estate market and then it stabilizes. Look, this is what I've been saying. Nobody knows. These guys clearly have a model. They're really smart. They're privy to a lot more data than I have or most other people do. But without bringing up the 2020, he's going to keep rates low. They've been wrong before, right? So the inflation is transitory. So let's just see kind of how this plays out. Now, the other part I kind of highlighted here for you is if you bought a house at the peak of the market with a variable rate mortgage or a high loan to value mortgage, the rapid increases interest have hit you pretty hard. You're probably feeling very squeezed. Thanks, Sherlock Holmes. And that's kind of why last week I was talking about people who bought Precon. They're blaming this guy because he's kind of sending people the wrong way. And at least at the very moment right now, he's acknowledging it, which is, I don't know if it's a good or a bad thing, but at least he knows, right? And then the last thing I have here is that he says that the rate pause is conditional on the economy moving in line with the central bank's forecast. So right now, based on what this article is saying and kind of what he had in the interview and the notes, he's saying that real estate prices should come down a little bit. And this is just for that market, right? And then they should stabilize. If they remain that way, then they don't need to hike rates anymore. Now, you have to remember one specific thing. there's a lot of talk about increased activity. And if prices are going up, that means it's going to skew outside of their forecast and their data will change, which means that they have the kind of runway to increase interest rates again. So if prices do go up, right, they're going to increase rates again. So it may not be as kind of desirable of a trade if you're trying to get the market stabilized. So these guys are very, very much focused on what's kind of the upcoming data, and things are going to change. So we're going to have to look at a lot of the other things that are kind of coming down the pipeline, especially with the CPI prints and kind of the ridiculous job data that keeps being kind of like changed the month afterwards. So there's a lot of things that are moving around. That's why like anyone who tells you they know what's going on, like I think it's kind of baloney. Now, if you found this content helpful, make sure you smash the like button and subscribe to the Prime Property channel, because every single week we put out awesome content like this to kind of educate you on what's happening in the real estate market and how it's going to impact you and your real estate journey. Now, if you do want to look for some help on how to navigate this real estate market and work with some experienced realtors like myself and our team, you can book a call with me. It's free of charge, no obligation, to kind of see what you want to do in the 2023 real estate market. Just go to the link that's right here, www.chatwithzen.com. Now, the next article we got here is many new homes at risk as major Vancouver developers files for insolvency. So there's a pretty big kind of Chinese-backed, call it Chinese capital developer in Vancouver that's been land banking, and they're just filing for insolvency. Now, I have highlighted a couple things here. They got about like $700 million in outstanding debt. They have 16 active projects, and of the 16, only one of them is being built as per this article. So it's very obvious that these guys are land bankers, and you know, when land values keep going up, you can keep refinancing and plowing capital into it. But when values are coming down and your interest rates are high, you have a hard time servicing this, right? So the question when people read this is this going to come to Toronto? And here's kind of my take on it. We had something similar to this. We had a little kerfuffle with Spurred, which was a fairly large builder in Toronto, and they were actually building, not necessarily land banking. So what happened is the big time developers who are well capitalized, and you probably know who they are if I say them, right? Because they're like the big four. They are probably going to buy up a lot of these projects, kind of like what happened in Toronto, and then they're going to resell it at a certain price point so that it's still profitable for them and just gets pushed into the funnel. Now, can we see some smaller time builders go under? Absolutely. We already saw one, I think, last year at the end of it, which was a project that sold for way too little in Mississauga. Right, I'm not going to say the project name, but they sold for way too little, and then the project got canceled. Recently, we had a fairly large builder that basically canceled a project in the kind of Cornell area of Markham because they undersold the project, and because it took so long for them to break ground, all the contracts and interest, it just didn't make sense financially for them to build the project because they would lose money. So that project got canceled too, right? So that's a pretty big builder. Now, that big builder is probably well capitalized, so no need to go under. You can probably just figure out what to do with the land, so they're okay. But do you have the smaller builders, you know, maybe they've only been around for, call it like 3 to 5 years, where, you know, they could basically go bankrupt because they over levered themselves, or maybe they went, you know, too hard, too fast, too strong, right? Absolutely, we're going to see that. But is that going to cause a trickle effect of like housing crisis and all that stuff and prices coming down? I don't think so, because the big guys who are well capitalized, who can build without construction financing, they're going to scoop in here and kind of pick up the deals. It's kind of like in the resale market. You got people who got tons of money and they're praying for people. No, it's not preying on people that, you know, can't finance the deals, or they can't service it and they have to fire sell it, and they'll come in here and then they'll be able to make some money off that. So it works like that in the developer space as well. It's just, you know, they don't talk about it as much. Now, the challenge with some of the backlash of this is if all these projects continue getting canceled, maybe there'll be more kind of legislation on how pre-construction is sold, because honestly, these like pre-construction projects are being canceled willy-nilly. So I feel bad for the people who kind of put money in there in like 2017, 2018, and 2019, and then now prices are basically unaffordable for them. They're getting the deposit back, sometimes with interest, sometimes with not, and then they're sometimes just out of the market. And that's the unfortunate fact with like no real recourse, right? So that's kind of one of the crappy things about how all of this is operating. Now, the last article we got going on here is Multiplex Housing. So on Thursday last week, the city kind of put a draft amendment for being able to upzone all the properties. Now, within that, there really isn't anything too kind of granular. I mean, obviously this can be changed because it's going through its first hearing, but essentially they're saying that they're allowing all properties, as long as they meet a certain criteria, you know, fit in the neighborhood, et cetera, right, to become a multiplex, which is defined as a duplex, so a 2-unit, a triplex, 3 units, and then a fourplex, which is 4 units, right? And then on top of that, you can add on like a laneway or a garden suite. So effectively, if the property permits it, you can go up to 5 properties. And I think they locked it into 4 stories. So it's not going to see like some crazy amount. Now, is this going to be great for supply? Absolutely. Is it going to create affordable housing? I don't think so, because what's going to happen is a lot of these land values are going to go up because you can upzone. And I've talked about this last year too, when they were talking about upzoning everything in Ontario. The great thing is if you own that piece of land, you now have potentially a lot of ability to unlock that property to increase your rents and build more stuff, right? Obviously there's a cost to construction and everything, but you have opportunity there. But as a person who's an investor, if you can get the numbers to work on say like a 4-plex and a 5-plex, you're going to be able to rework the numbers to see how much you're willing to pay for that piece of property and then redevelop it. And basically what that's going to do is it's going to compress the cap rate some more, drop it down, meaning which increases the value of these pieces of land. So is it going to at some point create affordable homes for people? Probably not. But is it going to be able to create different diversities of rental units that are kind of land-based and not condos, for people like walk-ups and stuff like that? Absolutely. I think it's a good diversity of what can be built, which is, kind of a nice thing rather than just, ginormous big mansions and also condos. So it's a good middle kind of type of homes that we need for growing families. But is it going to be affordable? Unfortunately, not. Well, that's a wrap for this week's video. If you are looking for some help on how to navigate this real estate market, you can book a call with me right here, link right here, www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.